Good morning and welcome to the Saxo Bank Morning Call. It is Tuesday, May 7th, and we have plenty of headline-driven markets. Of course, over the weekend, it was the Trump tweets that set things in motion to the downside in global equities, concerns that these trade negotiations are suddenly on the rocks. A bit more risk-off overnight. The market's sort of trying to recover, and then overnight we get some confirmation from the U.S. trade negotiator Lighthizer that confirming the wording about the tariffs, the concerns that that China was reneging on some of the language or sort of pulling back on some of its commitments was apparently what led to this initiative from the U.S. side to threaten tariffs again. And now we have the latest news, just minutes before we're coming live here, that chief Chinese trade negotiator Liu He will be going to Washington for these talks at the end of the week. So that was considered a strong sign that some breakthrough could happen. And just for an indication of the reaction function here, we saw a NASDAQ futures bid 50 points, and we saw the S&P bid 15 points. So you just see how the very sort of headline-prone market. I have a chart here. It's already out of date because it was snapped before that latest headline. And it just reminds us all that this trade negotiation situation is going to be ongoing and can change direction violently at any time. And is probably, ironically, one of the reasons we have such low volatility, as traders and investors are a bit reluctant to commit to longer-term trades. If we do look at the chart again for the dollar-yen, we see that it has so far stuck lower. That could be out of date as well pretty soon if we get a really strong surge in global risk appetite again. But interesting to note there that Ichimoku cloud really sort of defining the action. That 110.85 area is the upside of that, and we have a gap up towards 111 plus, which was the reaction over the weekend of those Trump tweets. Now, Ola, another area where we have politics really driving things is the oil market. Obviously, some of the global growth concerns mixed in with that and all the trade stuff, but also the Iran sanctions.
We have indeed, and we can just take a look at the chart here just to give a sense of what's going on. We did have quite a strong sell-off yesterday. We broke below 70 in Brent crude. It looks like the 50 and the 200-day moving average today coming in around 69.20. That's providing a solid line in the sand. But what was interesting yesterday was actually while the market was coming off, the backwardations, the so-called backwardations, the spread between the front and the 6-month spread, or any spread, continues to go up. That basically means that the market is still worried about supply. And when you have a situation of spot price falling but a backwardation going up, that is a sign that that the market doesn't really believe this sell-off. And that's what we've seen a reaction to this overnight. You mentioned the Middle East. U.S. is sending an aircraft carrier to the Middle East, and because Iran is threatened to close the Strait of Hormuz. They've never done that. The Strait of Hormuz has never been closed.
That's the so-called nuclear option.
Yeah, but it adds to this continued worries about the supply going forward, and it means that the correction potentially is over at this stage.
All right. We'll watch the oil markets closely there as well. And overnight, we had big news in Forex where we had the RBA not cutting rates. I really expected the market was maybe around 50-50 before all this latest Trump tweets and worries about trade negotiations. I thought perhaps this concern might trigger the RBA to go ahead and cut. They did not cut, and of course Aussie, the knee-jerked higher on the news. You have a chart here for perspective. That 70 line in the sand, that lower dotted red line is the 70 area. We managed to dip below a little bit, but now of course we're back above as we sort of sort out what where these negotiations are headed. I really don't understand the RBA's thinking here. You have a housing market that's in collapse, but they're insisting on looking at the most lagging of data, which is the employment market, even though they've had a big inflation miss. So it's policy in the rearview mirror for the RBA, and that means that the cuts are going to come a bit later. I think they still will eventually come, and that also means that we have a setup where these Australian employment releases, which are unfortunately very, very volatile month to month, will get exaggerated a reaction function in the market. So we're really going to have to, as traders of Aussie, put those employment data points very high on the event risk calendar. And if we look at the chart here again, we have the RBNZ up tonight. We have Aussie Kiwi rebounding very, very strongly. Of course, also the whole U.S.-China trade negotiations, playing a big effect on Aussie here in addition to the RBA. I think the RBNZ will be less likely to disappoint. They seem to be on a mission to engineer the Kiwi a bit weaker, and I wouldn't be surprised if they go ahead and cut tonight. It's also expected around 50-50 to slightly higher probability of an RBNZ cut. I think with those expectations, the RBNZ, given their shift to a more dovish stance, is more likely to go ahead and follow through. Now, although we talked about oil, other commodity markets, very interesting this time of year with the planting season going into full swing in the U.S.
Yeah.
Some interesting news there that doesn't fit with what we're seeing in the actual grain pricing.
No, I think we'll just start off with this one. This is for a chart first here. If you take a look, this is just giving an idea about the progress of the planting in the U.S. And you can see corn planting is way behind. That's the top left, and then we got spring wheat, which is also struggling to catch on. And we really had some really dodgy weather this spring, and now it's very, very wet.
Yeah, too many flooding, so the ground is too wet to even plant.
Yeah, so we have all this conundrum now with the planting delays, which should support the price. We have a record short, which potentially you can see on the right there, which is the combined short in soybeans, corn, and wheat. You can see it's never been this short before. But against this, we have obviously the situation with ample stocks. We got the African swine fever, which is killing millions and millions of Chinese pigs, which is reducing the feed demand. And then we got also the looming tariff increase on Friday. So this is really creating a very troubled space right now for the market, and you can see the result here on soybeans. We are toying with these multi-year lows yesterday down towards this 810. Seen a little bit of bounce overnight, but what we could see in soybeans is now that even if we should get a trade deal, it basically means that because it's delayed, farmers may switch from corn and wheat to soybeans because that's later planted, so they may have a better result getting into soybeans, and that's reflected in the spread in the middle chart, which is the spread between corn and soybeans. We can see that's come down to a multi-year low, and that's basically that's highlighting this continued premium or selling price we got on soybeans.
We both glanced at a chart here. I thought it was a bit interesting, just very, very tactically, that we did gap lower, for example, in corn, but then it sort of closed strongly on the day. Just an interesting gap, and then a semi-rejection of that gap.
And that was reaction to this the planting progress. They are announced every Monday evening, so that's probably what gave it a bit of support yesterday. So I think we just have to keep in mind the market is record short. So if there's any change in the technical or the fundamental outlook, then we could be in for a bit of a run to the upside.
All right, now before we get to the calendar, I want to mention one more thing that's seeing a lot of volatility in the Forex space, and that is the Turkish lira. We have Erdogan out essentially announcing that he's going to nullify that Istanbul election result, and fears around this that the democratic rule is under siege in Turkey. We have a chart here showing a dollar try, and of course Turkish lira very vulnerable to these types of news items, as we have a country that has traditionally run a current account deficit and is reserves very much dwindling. So dollar try bursting higher here. This really sets the pressure on the lira further. There's plenty of situation. The setup here for an outright crisis. We almost already saw that last year, but it's still there for Turkey. But another thing that's interesting is it's a bit contained. It's contained to Turkey. It's not seeing follow through to the rest of EM. So we're seeing, for example, EM this morning bid on the news linked to the U.S.-China trade negotiations with Liu He coming to Washington. Briefly, just so you can do a snapshot, if you're looking for corporate earnings, we have the calendar here. Don't have a lot of commentary here, but do note the key companies coming out today. BMW was out earlier. They had to do set aside some money for potential antitrust situation in Europe. But I think we're through the heart of earnings season, especially in the U.S. Now, onto the macro calendar. Again, the RBNZ up in the Asian hours. We do expect a cut. I'd be surprised if they don't follow through with that. We also have a bit of Swedish noise today, and such a quiet day tomorrow. I couldn't even dig up any highlights that I wanted to put on the calendar. The other items this week, of course, it's going to be all about headlines in U.S.-China trade negotiations, but also that Noise Bank meeting on Thursday, the last central bank highlight of the week, and then Friday sees the U.S. CPI release, which could see a flurry of volatility around that. That's it for today. We'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.